Officially off to the races. The crowd is behind me. We are gearing up, yes, for this trading session. There's a lot on tap. And let's talk about stocks because we do see the market still hovering near all-time highs, even though we see a dip in the major indices at the open today. So joining me now with more is Alex Guiliano. He's CIO of Resonant Wealth Partners. Alex, thank you so much for joining the show this morning. What do you make of the markets as we open for trade?
Yeah, great to be here this morning. I would say, this morning with the minor sell-off we've had is really more of a bond market warning rather than a stock market sell-off. We faced the last several months of geopolitical uncertainty, and what the market really struggles with at the moment, with oil pushing higher along with rates being higher at the same time, the market's had a bit of a seesaw back and forth here trying to grapple with, are earnings strong enough to continue that resilience over the next several months?
And what are the earnings telling to you? We'll hear from the retailers this week, Nvidia next week, but decent results from Home Depot this morning.
Yeah, I think the results from Home Depot this morning, especially the fact that they reaffirmed their guidance, was really a strong indicator that the earnings can continue to be resilient. And earnings being resilient is really the market's best defense against higher rates, especially with the drift we've had upward in the 30-year.
Yeah, we'll be watching that indeed closely. Anything else from these retailers that you want to hear as they continue to report this week?
I think the biggest thing that they've all signaled is the consumer hasn't broken. I think there's a lot of caution out there that consumers are really evaluating the discretionary spending and are evaluating if that's something they can continue. But the key is that the consumer is going to continue to spend. I think the bigger challenge is if the energy costs continue to remain higher for longer, can they absorb those behavioral dynamics and continue their discretionary spending at the level they've had? Home Depot's reaffirmation this morning of their full year guidance really only grants credence to that theory.
Yeah, we've gotten a lot of economic data over the past week or so, specifically about the consumer. Any takeaways from that?
I think the biggest thing is that the retail earnings that we faced have been that stress test for that American consumer. And the consumer is still in a strong place and yet is acting cautiously in their decisions before they make them. I think the biggest thing that we're worried about with the conflict that's going on right now is if we have higher rates for longer, as long as it continued geopolitical uncertainty, is that consumers' uncertainty going to actually change their behavior and cut discretionary spending? The good news is that the retail earnings that we've already seen have just continued to evaluate the fact that consumers have been resilient, and that trend is continuing.
How are you advising clients in this market when they look at their portfolios and any sort of reallocation?
I think this is really the summer of reallocation for clients. I think we've already faced, obviously, an S&P 500 that's up over 13% this year. And clients are asking themselves, with the continued uncertainty that we've had, is this a great time to take some chips off the table and rebalance, especially in light of the bond markets providing much higher yields than they were even a year ago? And so this is a great opportunity for clients to step back and evaluate, hey, what income do I really need to have coming in? Can I take some chips off the table and reposition, not just from stocks to bonds, but also in the types of equities you faced? You have opportunities in healthcare, financials, and other sectors, especially even the beaten down software, where earnings have continued to be strong. And those strong earnings are really the market's best defense against higher rates.
Yeah. So I gather that certainly you're watching the yield closely. You're watching oil prices closely. We'll continue to follow the earnings as they come in. Look, in just a few months, we are going to get these midterm elections. Is there anything that you're advising clients or conversations that you're having with those that you work with in regards to preparing for the midterm elections?
Elections always create a lot of noise around market uncertainty and potential opportunities or detractors based on market elections. I think the biggest thing for clients to evaluate is that oftentimes markets may move in the short term based on political elections, but they don't tend to drive returns over the long term. And I think the bigger thing that investors should be evaluating are the strengths of earnings that are being faced and also the trend in rates. And, obviously a lot of the talk around the new Federal Reserve regime out there has been around, are they going to soften rates? Are they going to raise rates? Obviously, there was a divided Fed at the last meeting. I think the bigger story is really the 30-year Treasury drifting upward is doing a bit of the tightening for the Fed. And so evaluating more the Fed and the earnings is more important for investors than focusing on the political noise.
Anything else you're watching that our viewers should know?
I think the biggest thing for investors right now is evaluating where they really want to be, right? And so making sure that the names that they own have those strong earnings that continue to be resilient, and also evaluating what price they're willing to pay. Obviously, we've seen a lot of volatility in some of the AI names, especially over the last month and a half. And so evaluating, are investors comfortable with the price that they're paying for those names? Or maybe perhaps taking an opportunity to rebalance and earn the level of income that they want and shifting into names that have the resilient earnings to continue on the pathway that we've been on.
All right, Alex, how much does Nvidia matter next week when it reports results?
I think it's yet again another opportunity for reaffirmation on the AI story. I think there's going to be a lot of short-term guidance provided that's going to provide opportunities for market investors to want to continue to play the AI story, similar in the way we had Microsoft's earnings just a few short days ago. And so that opportunity for reaffirmation in the AI story is going to be an important part.
All right, Alex Guiliano, CIO of Resident Wealth Partners. Alex, thanks so much for joining us on the show today.
Great to be here.